Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin crashed below $70,000, Ethereum faces billion-dollar liquidation risks, and Vitalik Buterin declares the Layer 2 era fundamentally broken. Bitcoin is trading at $70,169, down 43% from its October peak of $126,000. The digital asset briefly touched $69,000 on Bitstamp, marking the lowest level since November 2024. Crypto markets have seen over $700 million in forced liquidations, with Bitcoin accounting for $410 million and Ethereum $208 million. Glassnode data shows Bitcoin trading below its true market mean, around $80,000. A critical support level now flipped to resistance. Spot Bitcoin ETFs recorded $545 million in outflows on Tuesday, with BlackRock's IBIT alone shedding $373 million, marking the worst institutional exodus since the ETFs launched. One historical bottom indicator suggests convergence at current cost basis levels implies a spot price near $60,000. Bitcoin's hash rate has declined 20% from its October peak as miners face a profitability crisis. Stifel predicts Bitcoin could fall to $38,000 based on linear trend analysis, while Galaxy Digital counters that the low to mid $60,000 range represents a likely bottom. Ethereum is trading at $2,076, down nearly 30% over the past week. Trend Research, a crypto fund holding 488,000 ETH worth approximately $1.05 billion, faces $862 million in unrealized losses. The fund has been selling over 112,000 ETH since early February to avoid forced liquidation at $1,830. Vitalik Buterin delivered a bombshell critique of Ethereum's Layer 2 ecosystem, declaring the original roll-up-centric roadmap no longer makes sense. With Ethereum fees plummeting to near zero, Buterin argued most Layer 2s have become commoditized chains offering nothing beyond cheaper execution. He called out projects like Coinbase-backed Base, which generated $75 million in revenue during 2025, but paid only $1.5 million to Ethereum for settlement. Political turbulence threatens crypto legislation. Senator Chris Murphy accused President Trump of corruption over a $500 million World Liberty financial deal with a UAE-backed group, stalling negotiations on the Clarity Act. The White House set a February 28 deadline. The CFTC withdrew its proposed ban on political prediction markets, clearing the path for Kalshi and Polymarket. CME Group announced plans to explore launching its own coin and will introduce 24/7 crypto futures trading in Q2. TRM Labs achieved unicorn status with a $70 million Series C round. XRP crashed to $1.36, its lowest level since Trump's election win. Spot XRP ETFs bucked the trend with $4.8 million in inflows Tuesday. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.